Been brutal, and this is going to be an options portfolio review covering the positions that I have on this month of July. Hi, Evan. Hello, everyone. Evan here from HefTrade. Hope you're having a great day today. I'm going to be covering the positions I have on, the new rules I've established for myself in a Discord group that I have just created for myself, and the analysis I've done for these positions that are on the screen here. So let's get into things. As you see, I have positions for IWM, Meta, HD, MPC, MU, Amazon, HPQ, and ChargePoint. All of these positions, with the exception of ChargePoint, Home Depot, are put credit spreads, ChargePoint being a leap call, and Home Depot being a broken wing butterfly. The positions that are out of the money are doing fine. Obviously, they're showing an unrealized loss, but it's something that I have to just hold on to and be comfortable with and wait for the market to keep moving higher. Hopefully, it will do just that. I have positions that are spread out across different expiration dates. So my hope is that in the long term, in the 62-day expiration period, I'll be able to capture a good amount of the extrinsic value of these options here and then get some profits out of those. In the next few days before 21 days to expiration, I might see some profits out of these 4 positions, but with that short of a time period left in the trade, it might not be the case. So let's go over to the Discord and let's check out some of the rules and some of the trade analysis that I have created for myself. So over here in the Discord, you'll see I have HefTrade, win rate, and my HefTrade trading rules. So let's click on the trading rules, and I'm going to go over these 12 trading rules I've created for myself. So firstly, I'm planning to use defined risk or limited loss strategies only, no naked trades. In my previous videos, you've seen that I had a position on for Plug Power, and I was selling short puts, and that really tanked my account. So from that experience, although I recognize short puts are a great strategy when used responsibly, it can be something that can go sour and it can go really bad picking on the wrong stocks. So to prevent that, I plan to just use defined risk strategies, and hopefully I can gather some profits that way. I've gotten into 0 DTE trades this summer of 2024, and I had a little bit of success. So that's something that I can employ in my trading account only 3 times per week, 1 trade per day, of course, so that I don't overtrade. 65% is my profit target for my winners, and 100% will be my stop loss. My exit strategy is 21 days to expiration, or 21 days in the trade, whichever one comes first. For leap options, I plan not to use more than 7% of my account value. I plan to sell out of the money calls if the trade reaches a 200% profit, and use the weekly chart in the oversold conditions, hitting a negative 30 or less, and exiting if the overbought signal is hit on the weekly chart for the RSI. Max loss being a value of 7% per trade of the account, but this particularly is the point for the leap options here. This will be a lesser value for the spreads that I trade on the regular basis. Max number of trades being 12, simply because I like the number 12. Close all trades condition. This is what I like to call the windfall. In previous instances, I have seen my account grow significantly and quickly because of windfall conditions, where the account makes around 2.5% in a day. And so because of that, I plan to use the windfall strategy as a way to grow my account. I've talked about this and told myself multiple times, when you see the windfall, it's time to close everything out, regardless of how things are doing, go to cash and wait it out. And I believe this could be a strategy that could help me in the future, because it's not something that I have taken advantage of. And so when you're doing the same thing over and over again and you're seeing the same results, might as well change something up, and the windfall seems to be that strategy. My waiting criteria after receiving a windfall, waiting in cash for some sort of a drawdown on the SPY, because once the SPY goes down, what's the next thing it does? Goes sideways or goes up. So my intention is to wait for a big drawdown in the SPY in order to re-enter a bunch of put credit spreads and then move, hope to see the market move higher. Bearish trades, although I have had some success in the bearish trade department before, I have had losses probably more often in bearish trades than I have with bullish trades. So I do plan to have limited amount of bearish trades on, no more than a -10 portfolio delta. So I will try my best to be strict and stay by that rule, as that says there. And moving on to number 11, close bearish trades after 5 days. As we all know, the market's favorite direction is up, and so that's one of the reasons that I like put credit spreads, and I also like trading in the bullish direction. 5 days in a bearish trade sounds like a lot of days for the market to be going down, or for one specific position to be going down, and so that tells me that 5 days is a good amount of time to say, I'm done with this trade and I'm going to close it regardless of what happens. Last but not least, one criteria is, these are the criteria in which I'll be searching for trades. If I find that a trade only has one criteria, it's a no trade. It's not good enough. If it has 2 criteria of convergence for good trades, then I'll put the trade on. 3 criteria for convergence will be my best trades. The 3 criteria is something that I will go over just now in my Discord over here, where I have the Heft trade. Alright, we're over here in the Discord where I keep a journal of the trades that I have on currently, and so you'll see here's a 2 criteria trade, but let's speak specifically to the 3 criteria trades. So charge point, this is probably a good 3 criteria trade, although I'm going to use an example that is very good example, which I would say is the Home Depot trade that I put on just a few days ago. Alright, here we are with the Home Depot trade. This is certainly a 3 criteria trade based on what I know and what I've experienced. This trade was put on July 18th, and what I noticed on the chart here was that the day before, Home Depot made a push higher, and it appeared like it was a look above and fail. You'll notice that this is on the 1 hour time frame, and in the next day there were these 2 bars where there was a big red engulfing bar for the green bar, and that definitely showed me that there was a short position ready to be put on. So I saw a look above and fail as this situation here, and I also thought to myself, here is a resistance support line, so this could be a good chance that if the market moves down, then Home Depot could be a good place to enter a short trade. There was a previous support here, like I said, at this area, or pardon me, the previous support was for the 370 area, which is right around these 50%, 61.8 Fibonacci's, and there was a 2-week buying push higher, which brought the RSI over 81 on the 4-hour time frame, and so I noticed that on the 1 hour here there was some on the 4-hour, in fact, there was some bearish divergence, and divergences on the RSI are one of the biggest things that I use. That's where I find my best trades. So I figured if I can use that benefit, then I will find myself in a good short trade here. So I decided to put on a broken wing butterfly at the 365, 2 short 370s and 1 long 380 for August 16th. I received a 167 credit, and I made sure that I'm keeping an eye on this. If I stop out, the max loss will be 334, a max loss of double the credit I've received. And I put on a trade alert at 38.2 Fibonacci level, right around here, to see if Home Depot hit this area. I would reevaluate the trade or decide to close it. So going over to the Home Depot, chart now. Alright, here we are at the chart for Home Depot. And so one of the things that I decided when I got the trade alert, I set the trade alert right here around 361. I decided to stay in the trade for a little while longer because, like I said, I have a 5-day maximum of staying in short trades. Currently, I've only been in this trade since this point right over here, which was 2 days. So I decided I would stay in this trade and see what plays out next week, and then I will exit the trade either at the 5-day mark or before, depending on how much premium I receive, so that when I close the trade, see how much profit is on the table. Additionally, the reevaluation that I thought in terms of this trade is the fact that we've moved down 2 separate days, and so if there is an up move, there could be a little bit of a bounce off of this resistance area, moving us lower even further. And like I said in the analysis, considering that Home Depot has moved up for about 2 weeks, I do see there could be some move down to possibly this 355 area where there is some previous support, as well. That kind of has a confluence with the 50% area on the Fibonacci retracement over the past 2 weeks. So seeing that made me think this would be a good area to definitely take the trade off. We haven't reached the 38.2 yet. We're just getting kind of jumbled up with this noise over here. But regardless, with this being a positive and a extrinsic value play, and it being a broken wing butterfly, the decay is happening below the levels at which I put on the short calls. So I decided to stay in the trade. Hopefully it doesn't come back to bite me. So there you have it. There's the analysis I have going. I hope to be more disciplined in the coming months. Please stick around and watch me and encourage me as I go through my options trading journey. I do really enjoy trading, and I hope to meet like-minded individuals. If you like this type of content, click the like button below, hit the subscribe button. Happy trading to you all.